So as you might know, the crypto market is bullish again. This is because China and the US has made a new deal regarding their tariffs. But will this sentiment last? Let's talk about it. Hey guys, welcome back to Republic Labs YouTube channel. In this video, we will talk about the current market condition and how the bullish sentiment might not last. So as you might heard at the start of the week, China and the US has made a new deal regarding their tariffs. As you can see here, the United States has reduced their tariffs on Chinese goods from 145% to 30% for only 90 days. China responded to this by lowering the tariff on US goods from 125% to 10% for 90 days also. This has created a bullish sentiment because essentially things are back to normal, as this new decision seems like both countries had made peace. In response to this, the crypto market reacted positively, with Bitcoin going above 105,000 US dollars and the crypto market overall going up significantly. As you can see here, according to data from CoinGecko, the total crypto market cap increased to 3.5 trillion US dollars, which is its highest since the last 7 days. Also, a lot of assets went up as well, with the US dollar going up and the stock market also going up. One example is the S&P 500, which reached its highest value since the last month. While this all seems positive, there are still doubts that the bullish sentiment might not last. This is because, as you can see here, the announcement stated that these tariff changes will only last for 90 days. This means that after 90 days, there will be uncertainty again. And with uncertainty, there will be volatility again in the financial market. This uncertainty created doubts among investors and traders, especially huge ones. This is why the bullish sentiment is not really strong yet, as there are still a couple of things that might shake investors and traders' confidence. Aside from the uncertainty in the next 90 days, there are also a couple of things that might increase volatility, some of which includes macroeconomic data. As you can see here, while the market is currently bullish, the sentiment is still unsure. This is because the US economy has not really recovered yet. The US plays a huge factor in determining the sentiment in the financial market because it has the highest volume. So, data regarding the economy of that country will always impact the market significantly. Now, one data that's currently creating volatility is the unemployment data. This is because while the sentiment around the market is bullish, the US economic data is not really there yet. As you can see here in 2025, the unemployment rate data has been increasing, which means that the US job market has not really recovered yet. As you can see here, from January to February to March, the unemployment rate keeps on increasing. However, it's been stagnating around March and April. Some took this as a positive sign. However, some are still doubtful about the US economy. Investors and traders' confidence might increase again if the unemployment rate data slowly decreases. As you can see here, it's not really possible yet, as there are no signs of a potential decrease in unemployment rate. Another data that's causing uncertainty is the inflation data. As you can see here, after being published on May 13th, the inflation data has not shown positive signs yet. As you can see here, the monthly core inflation data and the inflation data has increased, which means that the US economy has not recovered yet. However, the yearly inflation rate has decreased, but the yearly core inflation data is still stagnating. All of this data shows that the US economy has not recovered yet, because if the economy has recovered, then inflation will go down again. So overall, the sentiment is still looking uncertain, which can translate into bearish sentiment for the market in the long term. So, one question comes up. Is there no possibility for a bull market this year? Well, that might not be true as well. This is because there is still one sentiment that can trigger the bull market. The sentiment is the debt ceiling increase from the US. So if you haven't heard, the US is planning to increase its debt ceiling. The current plan is still being discussed. However, the plan is that the US will increase its debt ceiling up to 5 trillion US dollars or 4 trillion US dollars. This is significantly higher than before, but this might be good for the crypto market and the overall financial market in the short term. This is because an increase in debt ceiling will translate into more liquidity for the market, as more money will circulate in the market. When the debt ceiling increases, the government will encourage spending, which will trigger a dovish stance from the government. So, if the government is dovish, then fiscal policy will increase, meaning people will be encouraged to spend, and the money supply will increase. This policy will trigger the Fed or the Central Bank of the United States to follow suit, which means it might trigger the Fed to be dovish as well, changing its current stance from hawkish. As you might remember from before, the Fed is hesitant to reduce its interest rate, meaning they're still hesitant to be more dovish. However, if the government is dovish, then they will be forced to be also dovish. This is because the government and the central bank cannot have two different policy stance. So, if the government is dovish, then the Fed will be forced to be dovish as well. Currently, there are already signs of the Fed changing its stance to dovish. One proof came from the FOMC statement in this May. As you can see here, the FOMC stated that the committee will continue reducing its holdings of Treasury securities and agency debt and agency mortgage-backed securities, essentially selling their holdings and increasing money supply, which translates into more dovish. So if the government is dovish and the central bank is also dovish, this will increase the money supply, especially the M2 money supply. Historically, when the M2 money supply increases, Bitcoin also goes up and the overall financial market also goes up. As you can see here, the monthly data for the M2 money supply is already increasing, which means there are signs of a bullish movement. However, while this seems positive in the short term, this might be negative in the long term. This is because if both the government and the central bank is dovish during the current inflation condition, this might create a new normal for the economy. The new normal term means that the current high inflation data will be considered normal. This is bad for business owners and regular people like us. For business owners, the cost of maintaining a business will increase with higher inflation as the new normal. And for us, the cost of maintaining our life to fulfill our basic needs will also increase with the high inflation condition. So this might trigger a snowball effect, creating slow growth in the economy. Also, this might lead to a bubble and then a crash due to high inflation and high debt in the economy. So, while this seems good in the short term, this might not be great in the long term. But with the potential bubble and crash, in regards to the current bull market cycle, this might trigger a bull market and then a bear market, similar to the 4-year cycle we've been having. Currently, Bitcoin is still going up and it's still keeping its uptrend. If Bitcoin managed to break above $110, this might trigger a bull market. This is because it has been a strong resistance in 2025. However, if it fails to break this resistance, then it might continue its consolidation between $110,000 and $82,000. So what you can do now is just manage your risk better and not just FOMO into the market thinking that the bull market is here. You need to stick to your risk management plan and not listen to your greed. Well, that's all the information I have today. If you guys like contents like this, don't forget to like, subscribe, and click that notification bell so you guys are notified when we next upload. Cheers, guys!